A short presentation which outlines how we see the future for the industry in the year ahead. As you know, in the past we have been sharing this guidance typically in the month of February for the year ahead. This year, for the first time, we said that we will do it in the first quarter of the current year, and here we are in the first quarter of the current year as we had promised. And the reason for this change was the extent of uncertainty that confronted the industry at that point. Now we are in a position to share our perspective, and this is the structure that we have on the what has been the progress in 16-17, and what are some of the defining aspects of the industry going forward, and then finally the outlook for 17-18. Next, please. Yeah. So what we have seen in 16-17 is a combination of two things, and the outcome that we witnessed is the resultant of both these different set of issues. One is drivers, which have actually enabled the industry to grow, and the industry actually added $11 billion in revenue in the year, which you might find a little surprising if you were only going by qualitative media reports in between. But the fact is, $11 billion has been the increase in revenue in the year, 8.6% in constant currency, 7.6% in reported currency. Digital became more mainstream, continuing a trend, and that became the key differentiator. And as we have been saying many times, the focus is on skills which are in demand, not any skills, but specific kinds of skills. I'll talk a little more on that, and different newer business models and opportunities in newer markets. And M&A as one of the means of acquiring the skills that are required. But at the same time, there were a number of headwinds which the industry encountered and which have been very widely reported and covered in the media: political, economic, and technology trends. So the rhetoric on protectionism, the Brexit result, some of the debates on visa issues, all of these were part of that headwind. This uncertainty impacted the businesses that others do, whether it is a BFSI segment or whether it is any healthcare segment. Any and every segment confronted by the uncertainties tends to delay decision making in the quest for stability before they decide. So that translated again into lower opportunities for IT industry because of lower or delayed investments. And then these traditional services also growing more slowly, because the focus as far as the traditional areas, that is the non-digital, is moving more towards cost optimization, so which has its obvious impact on revenues. And currency volatility on the heels of the political and economic flux was another factor, and we saw therefore significant variations between the constant currency reporting and the reported US dollar figures of the growth. The other thing is, a lot of companies, and I'm talking now about the IT companies, actually did make investments, R&D investments into products and platforms to prepare for that digital future and to position themselves for the new and bigger opportunities that lie ahead. But these investments are actually those which have a longer gestation period and therefore don't translate into revenues early. But to my mind, it's a good thing that that is being done, because it secures the future even if there is a small price to be paid in the present. Next, please. If you look at the kind of sustained growth and the impact for the country, and we all know that this sector is particularly important for the economic well-being of the country and the future. And if you look at the IT BPM revenue breakup that you see on the screen in front of you, and you see the growth from 2012 to 2016 and fiscal year 2017, which just ended, Then we ended the year at $154 billion, and the data is, as I have already shared. But a couple of additional points I want to flag is that exports doubled over the last 6 years, and the base is increasing. So even with a smaller percentage of growth, the quantum of increase is likely to be larger. And the domestic market is the fastest growing tech market in the APAC region and grew at over 11% in INR terms. And this has a significant impact on the economy. So just to give you one benchmark, the export revenue of 1 year from this sector is equal to 20% of our total forex reserves in the country. That gives you an idea of how important it is. And the FDI into this sector is about 7% of the total FDI flows.